Great. Thanks for having me. Thank you, folks, for taking the time. I appreciate it. As I mentioned, I'm Waseem. I'm the CEO of a company called Pilot. We do basically accounting, tax prep, et cetera, for high growth technology companies. One of the things that's really interesting is that, as I mentioned, this is our third startup for me and my co-founders, Jeff and Jessica. And if you look at kind of our backgrounds, when we started our first company, we were all engineers by training. We had no finance background. We did it all ourselves. It was horrible. And in doing that, basically, we had to learn about how to be our own CFOs for our own companies. And what I want to talk to you today about is sort of basically what I wish someone had told us when we were getting started. So just walk through very, very tactically kind of some of the best practices that I think we sort of had to learn the hard way so that hopefully you don't have to. And the spirit of this is really just very, very brass tacks stuff. And I want to leave plenty of time at the end for questions. And I think one of the most important things you can do as an early stage startup is actually practice good financial hygiene. So what do I mean by that and like why it's important? Well, everything starts with your basic financial hygiene. In other words, you're not going to have good clarity about how the business is doing without using good systems and having good books. And this is both about the power that you get from having accurate financial data and also the liabilities and bad optics that you avoid by having good hygiene. Like fundamentally, your investors, your advisors, your landlord, et cetera, are not going to be cool with you not having your details all buttoned up here. And so here are some examples of hygiene issues to really be proactive about. The first is really just like choosing a good business bank and credit card. And you would be so surprised actually at like, I think many companies don't do this, but it's one of these things where just getting set up on the right systems from the get-go will save you a ton of pain down the road. So really choosing a good, choosing a good business banking credit card, not commingling business and personal expenses, using the right invoicing system, using a payroll system, using a reimbursement management system, having accrual basis books, and choosing a good taxpayer. And we're going to go into details actually on sort of all of these questions. And again, why does this matter? Why is financial hygiene important? Well, it's the only way to have an accurate view into the financial health of the business so that you can actually make the best business decisions. It's needed to fundraise and keep your investors happy. And it's also required to file accurate taxes, which helps you avoid all kinds of downstream pain. So fine, you're interested in starting this off right. How do you go about doing it? As I mentioned, the first step here is really choosing the right institutions. And the first decision is like where your company is going to open its bank account. And what we strongly recommend is a commercial business bank account, not an account designed for consumers. The question you sort of have to ask when you're evaluating your providers is, will it meet your needs both now and as you grow? And some examples of things to think about are like, with this business bank account, you're going to want to give read-only third-party access to your bookkeeper, your accountant, other people. Is that a capability that the bank offers? Are you getting a good interest rates? Do you expect to be sending a bunch of wire transfers or ACHs? And if so, what do the fees look like on that? Is there customer reporting you need to be able to pull from the bank? What do the reporting capabilities look like? Two ones we recommend are Silicon Valley Bank and Mercury, is basically checking all these boxes. And actually, we have a website where we sort of list our recommended financial stack, we can make intros to those providers for you. The same sort of thing applies when it comes to a credit card, which is, again, I think you're going to be happiest with a business credit card. And in particular, with one where you can have that read-only delegated access, one that meets your credit limit needs, one that you can potentially open up without having to incur personal liability, one where it's easy to set up new card holders as the business grows, so you can issue a new corporate card to your employees, or maybe one that has like nice rewards as well. And for here, we really recommend Brex as a provider. We've seen a lot of startups use. Then the next rule here really is don't commingle. So what is commingling? Commingling is mixing personal and business money. And when you have a company, one of the points of having a company is that it is a separate entity from you, the business owner. And so ideally, you're spending your own money on your stuff. and the business is spending its own money on the business stuff. And you definitely don't want to mix the two, because when you mix the two, it's just going to create a bunch of downstream problems for you. It creates a bunch of tax issues, including audit risks. It puts you at risk for personal liability. It muddies your own view of the actual health of the business. And that stuff may seem obvious, but we see a lot of startups do it. And we strongly, strongly encourage you not to. And I think the easiest way to do that is, again, as soon as you possibly can, get that business bank account open, get that business credit card open. And when the business needs to buy stuff, have the business buy it on its business credit card. And when you personally want to buy a fun thing for yourself, like buy it for yourself using your money, don't use the company's money to buy something for you. Ideally, when you can avoid it, don't use your own money to buy something from the company. Or if you do, make sure there's a good kind of reimbursement trail. The third is really around using professional systems. And this, I mean, for everything like bookkeeping, payroll, contractor payments, invoices, sales tax, payment processing, reimbursements, managing your cap table, managing inventory. And here's really what I would say, which is these are critical functions to get right. And they're also outside of most companies' core competencies. And I think it is a huge mistake to try to DIY here, because it is extremely time consuming and it is super prone to mistakes. If you set up on one of these real systems early, you get well-run operations, you get easier scalability. As the business grows and scales, you're already set up on a good foundation. Whereas I think companies that try to DIY have constant back office issues. You sort of risk compliance fines, and you end up spending more time and money to fix things than if you just started out using a real system in the first place. And so here's an example of like some of the systems we like QuickBooks, Bill.com, Gusto, Stripe, Rippling, Carta, Expensify. And my advice on this, and this comes both from our own personal experience as well as seeing how this has played out across 1,000+ startups that are our customers, I would use the best tool for the job as early as you possibly can. In particular, as I mentioned, use a real payroll system, use a real invoicing system that's going to look professional and help you manage collections. Use a real cap table management tool, use a real expense reimbursement management system. And the thing that's funny about this is I hear all the time from founders that they want to delay these purchases because they don't want to spend the money. They want to use spreadsheets to track this stuff. They want to do it themselves. And here's the deal. Your expenses as a business are going to be dominated by your personnel costs, the people you hire. And the cost of these software tools, frankly, is truly immaterial relative to those personnel expenses. Like Expensify is like $5 a user a month or something. And I see founders wasting their time managing reimbursements in spreadsheets because they don't want to pay the $5 a user a month. And like that does not make any sense to me, in the sense that your time is way, way, way more valuable than the cost of these tools. Using good tools will save you time. It'll help you avoid a bunch of pain. And then again, it'll help you lay that foundation that actually maximizes business outcomes. So it's very, very, very clearly ROI positive to just bite the bullet, make these investments early. So I'd encourage you not to be penny wise, pound foolish, to say, well, do I really need to use a payroll system? Like, yes, you definitely need to use a payroll system. Like, do I need to use an expense reporting system? If you're going to reimburse expenses, like, yes, you should just use a real system. It'll save you a ton of downstream pain. And I think the other note here is like, you're never going to be less busy. I promise that you like only get more busy with time. It's not like at some point in the future, you will have a bunch of time on your hands to like finally put into place the good system. So just like do it from the get-go, get it over with, and sort of reap the benefits. The kind of other related point here is just making sure you're tracking your finances early. And specifically what I write here is start bookkeeping early. And the reason is because, again, having accurate financial data helps you make better decisions and helps you avoid tax problems. And they're the basis for very critical financial reports that you'll need for the company's management, for fundraising, for board meetings, for investor updates. Like, this is the building block upon which everything else is built. And if you go to a potential investor or a landlord or whoever, and you say like, look, I've got these good to go, they look legit, that's a nice indicator that you've got a kind of smooth back office going. And again, it's less painful to scale if you start when it's simple. Because again, I promise that it's you're never getting less busy than you are right now. The other thing too that I would encourage folks to do is set up what's called accrual basis accounting. And basically, when you do accounting for your company, you sort of have two options. There's what's called cash basis accounting and accrual basis accounting. And the idea of cash basis accounting is that you record transactions when the money is actually paid or when money is actually received. And this is probably like how you live your personal life. If someone is like, how much money do you have? You like look in your wallet and you'd be like, $5. That's how much money I have right this second. That's kind of cash basis accounting. You're tracking where the cash is at any given point in time. Accrual basis accounting tracks when basically an obligation is incurred or a debt is incurred. So in other words, if I promise you I'm going to pay you $1,000 tomorrow, under cash basis, you don't record that at all until I've actually paid you $1,000 tomorrow or next month. Whereas on an accrual basis, I would record now, Waseem, owes person X $1,000 as of August 10th, even if the cash didn't immediately leave. Or similarly, if a customer buys from you and you deliver the service and they're going to pay you in 30 days, on the accrual basis, you're going to record that as soon as the service was delivered, not when the cash was received. And the benefit of accrual basis is it gives you a more accurate picture of the business. It captures who you owe and who owes you, and it provides better insight into profitability and the relationship between your revenue and your expenses. And your investors fundamentally are going to expect accrual basis books. Many standard metrics you'd like to look at, like gross margin, for example, will also need to be derived from that kind of accrual basis work. And then ultimately, at a certain size or stage, the IRS also requires it from a business bookkeeping perspective. So I encourage you to kind of set up bookkeeping early and to get accrual basis bookkeeping rather than cash basis bookkeeping. And then ultimately, like what your book should tell you are four things. They should talk to you about growth. It should be clear, is revenue growing? Why? What drove increases or decreases? How is gross margin trending? The second point is really around costs. Have my costs of goods sold and expenses changed in the past quarter? If so, why? The third is cash. Do we have enough cash to cover our near-term costs? When do we need to fundraise? And the fourth is trend. Are we on track to hit our business goals? Are there any anomalies in our trends? If so, that is worth digging into. The next item, and this is a good one to have, is getting paid, which is okay, you need to be able to get paid when you're ready to accept money. And there's actually a lot that goes into this. I cannot tell you how many founders I talked to who realize how subtle this is way after you start getting customers and you're like, oh, I need to get paid now. And some of the questions you need to grapple with are deciding your payment terms. Are people paying you up front? Are they paying you after the fact, or what's known as payment in arrears? Is it a subscription service? Do you know what the subscription payment cadences are? Is it annual, quarterly, monthly? What are the accepted payment methods? Does it have to be an ACH? Do you accept wires? Do you accept credit card payments with associated fees? Do you accept crypto? I mean, whatever works for you in your business, but you need to have a point of view on it. Because if you don't, what's going to happen is people will try to pay you with any payment method on the planet, and that you might actually find that from kind of a collections or maintenance perspective, that's actually not very efficient for you, because there was the one customer who really wanted to PayPal you or whatever, and all of your other customers pay you in a particular way, and you're like, well, it would be operationally a lot smoother if we just agreed, look, I'm going to restrict my payment methods to X and Y, and I'm going to have good processes in place for that. And that's because collections can get really complicated if you accept a really broad range of payments. So you need a point of view on that as you start getting customers. Another really critical detail, I think, in kind of setting this up is you need to include the right information that will help you do accurate bookkeeping when you invoice your customers or when you charge your customers for anything, which is okay, what is the date of the thing? Who is the customer and what do we actually do? And what is the service? In other words, if this is a prepayment for 12 months of service with a payment up front, we need to know that to book it properly. You need to know that to track it correctly. And also the customer wants to know what they're paying for and how, so that if there's a dispute later, you can go back and say, hey, look, here's the signed order form. This is what it said. It said it was an annual contract for XYZ, blah, blah, blah. And then also you want to make sure the customer experience is positive. Like this is a tiny thing, but like making sure the invoice looks professional means that it has some of these items, again, the date, the customer name, the service period, all that good stuff. And then you'll really want a plan for processing accounts receivable on a regular basis. So basically you have a calendar, like, okay, every Monday, say we send out our invoices, and then really having a plan for collections because some people aren't going to pay you. And then you might need to do something about it. So maybe you also have a process every week or every 2 weeks, you look at your list of invoices you sent and you say, oh, okay, these people are 30 days behind on payment. And then you're going to decide, well, fine, either I'm going to like send them a bump, I'm going to email them, I'm going to call them, or maybe after a long enough time, I'm going to turn off the service, whatever it is. You will want a plan for collections, a plan for what you're going to do in response to delinquent payments. So ideally, to make sure you're getting paid, you want to make sure you understand what the terms are going to be, make decisions upfront about how you get paid and the process by which you're going to manage your accounts receivable. The next point here is also just like getting the right tax preparer, which is to say, all businesses' taxes are not created equal. You want to work with someone who is familiar with taxes for startups, and in particular, experience with any credits you intend to claim. There's a particular tax credit that is especially interesting for technology startups called the R&D tax credit, which most tax credits are not that relevant for startups because most tax credits offset a company's profit, and most early stage startups are not profitable. But the R&D tax credit is an interesting one because you can use it to offset payroll tax, which you have to pay anytime you employ someone, whether you're profitable or not. So definitely the R&D tax credit is worth a look. Ideally, you would work with a tax preparer who is familiar with it and any other sort of relevant things. I strongly, strongly recommend not DIYing on the business tax side. It's just, this is again, one of these places where you'll be much happier working with an expert to get it done than trying to become the expert yourself. And the last thing I'd say is, don't be shy about getting strategic help. Like you as the founder, the business owner, your objective is to maximize the chance that the business will be successful. And frequently, or at least sometimes, the way to maximize the chance that the business will be successful is devoting more of your time to actually like talking to your customers, making the product work, thinking about the marketing strategy, as opposed to devoting your time to figuring out how the bookkeeping is going to work. So I think the other thing to note is you don't have to hire an expensive full-time in-house person to do this. You can get a fractional CFO to help out on things like budgets, forecasts, KPI dashboards and analysis, help with board decks, or advice on things like commission structures or fundraising strategies or miscellaneous compliance concerns. I think you should focus your time on the high leverage areas that you can uniquely do. And if you can trade, if you're in a position where you can trade dollars to get more time back by having an expert work on some of these other things, I think in general, that's a quite good trade to make. And here's ultimately just to kind of like paint the like two paths that we see all the time, because obviously customers come to us all the time in a variety of different states. Companies without good financial hygiene, what ends up happening is you just like waste a lot of time on things that are not related to making your business successful. You end up spending eventually, inevitably, significant time and money cleaning up your books after the fact because you need them for an investor or for signing a lease or whatever. There's a series of like annoying tax mistakes and fines, especially there's one in particular where I think if like companies have foreign shareholders that hold more than a certain percentage of ownership in the company, you need to file some specific form. And if you don't, there's an annoying penalty. Like there's all this good stuff that is really tied in there. They struggle to make good projections because they can't trust their past numbers. They scramble anytime anyone wants financials for them, like from a funding round. And they have difficulty because folks are skeptical about the state of the world there. And then there's just like a ton of pain associated with potentially legal hot water with personal liability. Now, companies with good financial hygiene, the picture is very different. you spend less time on the books because the books are done right the first time. You got them set up early. You got on the right stack. Like you did the one-time work to set up the machine, and now everything's kind of chugging along. You do successfully claim those tax credits. You do make realistic projections based on accurate numbers. You do have access to information you need to prepare for fundraising. When folks quiz you on your metrics, like you have them dialed in, and then you do a nice job just avoiding legal and compliance issues. And so those are sort of the two paths we've seen. Obviously, I think everyone wants to be kind of in the second category rather than the first, but I want to outline maybe a couple bullet points around common mistakes that we see people kind of fall into. And with that, I looks like there are a fair bit of questions in the chat. I wanted to kind of pause and shift gears and answer any questions that folks have. And Maya, I don't know if you want to moderate. Yeah, go ahead.
Yeah, I totally. Let me just paste into the chat kind of the collection of everything we have so far, and
sure,
whatever works best. You want to go down one by one, or yeah.
Sure. Okay. The first question here is like, what do you define as a good credit card? I would say something that is intended for companies, and then ideally something that's intended for startups. So we're big fans of Brex. I think lots of people like Ramp, but there's some other ones as well. But ideally, you want a business credit card that is designed like for your use case. And so that means like third-party read-only access for your accountant, ideally no personal liability, the ability to easily issue new cards to new team members as they join, stuff like that. I think those are probably the properties I would look for in the business credit card. Can you open a business account before forming a business entity? I think it depends on the bank. I think, a sole proprietor could still have a business account. I suspect you're going to want to form the business entity no matter what, though, for the liability protection that the business entity entails, or so that potential investors can invest in the entity. So I think you will want to form the entity no matter what. I believe in some cases you can open bank accounts without creating a new entity, though, yes. Should we be employing a business accountant and a bookkeeping service? Is one more important than the other, or both necessary? In my experience, you should be able to find someone who can both do the bookkeeping and the tax prep for you. So I would go to ideally like one provider who could take them both off your plate. If you have a tax person you really love and they don't do bookkeeping, yeah, I think it's okay for those to be separate. But if you can get it all under one roof, I think that is better and nicer. I mean, I'm a little biased here, obviously, because we do bookkeeping and we do tax prep. So to answer your question of what do companies recommend for taxes? Well, if you have a startup that does bookkeeping with us, we can also do the tax prep for you. For determining tax credits, would you suggest using something like Main Street? I mean, again, I think the R&D tax credit is probably the biggest one. It's actually something that we at Pilot can do for our companies. So many of our folks sign up with us for bookkeeping, for tax prep, for the R&D credit, and also for help on kind of the budgeting, forecasting, fractional CFO work. There are lots of providers out there. I think there is definitely some real value in kind of getting it all under one roof, but there are a handful of options in the market. Do you have any recommendations on where to find good templates? Off the top of my head, no. I think we have some stuff we have some template examples, I think, but off the top of my head, I'm not sure I have a great go-to resource for a template on like a budget or a forecast, which I think is what this question was asking. And then what do you recommend as a range of pricing for fractional CFOs? I think these folks generally tend to charge out. Like for our fractional CFO service, we charge hourly, and you can buy a certain number of hours as a subscription. I think we've seen, prices here range from like probably $300 to $500 an hour is probably the broad strokes kind of range there. So it's definitely not cheap, but at the same time, your time is not worthless either. And it's likely the case that an expert will do it better than you will, faster than you will. And in that way, like ends up saving you both time and money. So I think those were the questions that folks asked kind of during the conversation. Any other questions that I can answer? Okay, we got one in the chat from Rachel. Really important to also ask, what if you want to improve your business hygiene? Where do you begin? I think the first things to do are probably to ideally to separate out as much as possible the business and personal expenses. So I think that means getting that business bank account, getting that business credit card, and starting to move any business expenses into the business bank account, into the business credit card. And I think the best, the the sooner you do that, the better. And it's never too late to do that. In other words, if it has been a big messy mix before, not ideal, obviously, but that's fine. Like say, fine, as of this particular date, this is going to be the business stuff. This is going to be the personal stuff. And that is, I think, like step one. If you don't have good separation between those two things, all of the other stuff you build on top of it is not going to work, because all of the stuff you're building on top of it assumes that you've had the ability to kind of cleanly separate out the business and personal expenses. So that's where I would begin. I think Grace writes, once you have your books in order, how do you think about approaching forecasting? Well, I think it depends what you're trying to forecast. I think the probably most critical thing that you should know and understand is how much cash does the company have, and when is the company going to run out of money? And the simplest, and it's very kind of hand wavy, but I think still very useful. The simplest thing to do is just to say, well, okay, what is the bank? This is called computing basically your burn rate and your runway. Your burn rate is basically like, what was your cash balance at the beginning of last month? And what was your cash balance at the beginning of this month? You subtract those numbers. That's basically how much you spent over the past month. That's called your monthly burn rate, or just your burn rate. And then if you take the total cash you have in the bank account and you divide that number by the burn rate, out pops out some number of months. That's called your runway. And that's saying if you continue to spend at the rate you spent last month, you'll be totally out of money in 8 months or 6 months or 2 months or whatever it is. That's your runway. So I think definitely you want to have a very, very good handle on your company's burn rate and your runway, because you want to know how much money you're spending and when you are potentially going to run out of money. And like if you quiz me today, you're like, Waseem, what is Pilot's burn rate and what's Pilot's burn rate? I'm not going to tell you, but I could tell you. And so I think the thing I like about that is it's a very easy metric to compute. And I think that is a great, maybe one to initially kind of consider. That is baseline. It's just ultimately as a founder, like one of your main jobs is like, you got to make sure the company doesn't run out of money. I think for forecasting anything else, the way you would do it, like if you're trying to forecast revenue or headcount or something, is you look at how it trended historically and you try to understand sort of what the drivers are. Like if I was trying to forecast revenue growth, probably I would say, well, fine, my average customer, I think, will pay me X dollars. And I think I can add Y customers per month. And so I multiply those numbers and like, that's how much revenue I intend to add or I expect to add. And then, okay, maybe I am hoping to grow the customer base by, 5% every time period or whatever. And then you can kind of use that to build, okay, this is how this is going to trend. And I think the things that are probably most interesting are not necessarily like, okay, how is revenue going to trend, but maybe also what does that imply? Like if we have a guess that revenue is going to trend in some particular way, then the related question I'm going to have is like, okay, well, how many sales reps am I going to need to be able to add that much revenue? If my goal is in fact to add XYZ dollars of revenue and a given sales rep can add A dollars of revenue in a given month, well, if I divide these, fine, I figured out, okay, this is how many salespeople I probably need. And to get them trained, I need them to start a couple months early, et cetera, et cetera. You can get like arbitrarily complicated and sophisticated in these models. And I think my suggestion is maybe like, don't go overboard. Do something that is actually going to answer the specific question you need and probably no more. And again, this like budgeting forecasting stuff is stuff we can definitely help out with as well. Christina writes, monthly investor updates, any tips? I mean, ultimately, I think what you're trying to do with your investor updates is give your investors a sense of the state of the business. And then also like try to get them to help you as much as you can. So I think the most underrated part of the investor update is actually your requests for your investors. If there's something you need help with or an ask you have for your investors, I generally always like to include that, which is like, hey, and the more specific it is, the better. Hey, we're trying to hire a growth marketer and blah, blah, blah. Does anyone have any, if you have an introduction, like, please send it to me. By the way, here's a blurb that you can forward. Or like, we're trying to identify a pilot customer, a new customer in this vertical we're playing in who has attribute XYZ, please intro me. Like if there's something specific you want your investors to do for you, I would say including that is kind of an important part of making those investor updates useful. In addition to reporting on the state of the business, like, how's revenue trending? What is the burn rate and runway? How many employees are there? Any major ups or downs? But I think the thing, again, your job is sort of put your investors to work to try to help you out. And so I would write my investor updates in that way. I'm trying to get my investors to help me make my business successful. How to forecast while iterating at the same time or when revenue is irregular. I mean, this is kind of what I mean, which is this stuff is a little bit of an art and a science. I would not get too hung up on building the exact perfect model. That time is probably best spent like talking to your customers to figure out what they want. That's probably going to be more valuable than having put together the exact perfect forecast. But I think you want to understand sort of what the drivers of the business are, like where you're going to spend money, if you need to hire a certain number of engineers or whatever, how much that's going to cost. Like, you don't want to be surprised at how much you will need to spend in the future. Ideally, you're not totally caught off guard by what your burn rate will need to be in the future. Because if you are, then you haven't really had a chance to plan for it. Another question. Okay, well, look, thank you all for taking the time. I appreciate it. Thank you for having me. Maya, anything you want to say to kind of wrap it up, or any other things we should chat about while we're here?
Oh, looks like, did we have someone just put another question?
What other software do you recommend to utilize that hasn't been mentioned to organize financials? I would say that our recommended financial stack, and maybe Greg, you can drop a link to this in the chat. We have a page. It's pilot.com/guides/recommended-financial-stack that covers basically the main kind of tools and services and systems that we typically recommend.